Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer Brian Johnson, making professional trading simple. And the markets finished down for the day as we dove on, apparently the news is saying JP Morgan. So let's call it stocks dive on JP Morgan. Why not? I think stocks dive because it's just time. But we'll credit it to JP Morgan. I did talk about that yesterday. Intel reported well yesterday. JP Morgan not so much. So the markets definitely dove. That was a contributing factor, no question about it. But I think there was a little bit more going on than that. It's just time. The markets are ready for a pullback of some sort, even if it's for a day or two. It needed to kind of pull back. So we're coming into a 3-day weekend. Keep in mind, no trading on Monday. I'll be back with you again on Tuesday. But I may have a video out. My weekend video will be out anyway, either Sunday or Monday, one of the two. I'm working with a student on Monday, so more than likely I'll have that out for you on Sunday. If we take a quick look here, you can see the big dive down in the Dow, but still closing above some major support, and that's the 10,600 level, finishing at 10,610. So while it did dive below here, it was still able to squeak its way back up and above this area here. Still has now the 20 and the 50 to deal with. We may see a little bit more of this when these markets decide to dive. They don't seem to want to stop too quickly at these first levels of support on the way down. They tend to break those quick and then come back to retest them. But we have seen the bears do this before, and the bulls pull it right back up. Here's a great example: straight down, pull it right back up; straight down, pull it right back up; straight down, pull it right back up. Took it a little bit more time on this last trip up. This was a major move, and it was broad-based. It was all across the board today on decent volume. So this, maybe there's something bigger happening here. I guess we'll know when we come back from the break. We'll talk more about it this weekend too. This is on the Friday video here. We'll move on. You can see it closing back down here, almost getting back to the 20-day moving average, but closing back, as I said, above this 10,600 level. That is the first level to not only break below, but close below. More importantly, close below. And then ultimately the 10,500 level, close below that, and then a break of the 10,400 and a close below 10,400 would be really major in my mind for the bears. That is a big place to get below. Would be right down here now. And I will go into that maybe this weekend. NDX on a 60-minute, you can see it kind of moving sideways. Hit the top, drop, hit the top, drop. Moving its way back up. Maybe we start up. The markets have a tendency to do that. Kind of start after a 3-day weekend. People come back into positions, and maybe we see it kind of creep back up into here. We've still got some earnings that we're coming into now, especially I think with Google reporting soon, Apple's reporting soon, those type of bigger tech stocks that might help prop this up come next week. Only time will tell. We've got 3 days to look at it. All right, sitting right on top of the 20-day moving average. Perfectly logical place to finish the day. 1863.65 is your 20. 1864.52, so about a point above that. Did drop below it, but notice how the markets brought it back up. Also pay attention to how well this overhead resistance held today. We hit it 3 days ago, yesterday, or 2 days ago, yesterday, and now today, kind of testing it again and falling down. I don't have the volume down in here, but a pretty decent volume today on the move down. NDX on a weekly. Now that the week is over, we can really take a good look at this, and you can see that, well, basically right down to kind of, it really hasn't given us anything. Just sideways for the time being. A lot of what we saw right here. See this motion here? The weekly is starting to build that. Now the bigger, more major areas, of course, to a break and a close on a weekly below this level here. That is still a ways off yet. So that will be obviously something we keep an eye on if we continue downwards from here. We'll see if this can actually hold on a retest. SPX on a 60-minute doing the same thing as the rest of the markets, moving up. Now, this one's interesting. The NDX did not break to new highs on its test up. The SPX did. So here we have about 1150. Here we definitely have over 1150 for really kind of a double top. Yes, this is a break of the high, which can make a difference if you're an Elliott Waiver. But from a regular technical analysis standpoint, just kind of a potential double top in action. We do not have confirmation of that double top yet, but this was a very nice place to get short, very defensible place, let me say, to get short. For those of you that I mentioned that 1150 would be a good place, very defensible place to get short, or a break above 1152 to get long. For those of you that went short, took that trade, very good job. If you held to the end of today, you did very well on that. Now we're looking for maybe a retest back into this area. Maybe we see that Monday. Tuesday. That's a long ways off. We'll wait and see. That's a weekend thing. SPX on a daily, once again coming back down. If I extended this, you'll see that we're right on this line here, this blue line here. More importantly, we did come down to test or to drop below it, only to see the markets pull it back up above it. So still nothing really broken from the bull side yet. This is a break, a retest, a break, a retest, and now we're just kind of chopping sideways, which is a lot of what we saw back here. Got to get back and a close below this area before we really start getting, quasi bearish on the SPX. My level is still 1130 to get below and close below on the SPX, and we did not do that today. We got down as low as 1131 this week. We're not able to break or close below that 1130 area. So once again, still holding some pretty major support. VIX on a daily, it was up today, little bit. It was up earlier in the day and just wasn't able to hold it. I mean, the fear just still, it isn't there. It still isn't there. We're caught in between this little range-bound area here. We'll wait and see if we get any more movement next week. If the markets move up, we may see a retest of this lower level down here. But really, this is just telling me overall, there's still not a lot of fear in the markets. Even after today's big move, still not a lot of fear in the markets. So we play it as as we can. Keep watching the charts for any major breaks on the indices. Apple on a 60-minute, you can see it coming back down here to